The mining executives at the time were being told by the banks that silver was going to go to $70 and gold was going to go to 3,000. Of course, it didn't happen. The metals, silver retreated to 12 from 50, gold retreated to 1,000. And the mining sector was highly criticized, as I said. You're not going to see the mining sector do that again. And this is what is going to happen with supply. So to change this number, you're going to need to have triple-digit silver probably for a decade to make any difference in supply, which is pretty shocking. So in an environment where we're already in a substantial deficit, and you got the nuclear renaissance happening, what's going to happen to prices? Where's the metal going to come from? So these are the deficits that we've been experiencing over the last few years. The 2024 number is an estimate, of course, but nevertheless, these are substantial deficits. We don't know where this metal is coming from. There's lots of guesses where it's coming from. Speculation that maybe it's coming from Russia. India is a big buyer. China is a big buyer. It's illegal for China to export silver. India is planning on building the largest solar farm in the world. They're going to need a lot of silver for that. Maybe that's why they're buying so much right now. Their Q3 silver consumption was the biggest on record. I think they imported something in the order of 75 million ounces of silver in that quarter. Pretty staggering number. This deficit's not expected to change in any way, in the foreseeable future. We're seeing demand right now of around 1.2 billion ounces of silver, and this is an estimate for 2024. I've heard numbers as high as 1.4 billion ounces of silver consumption expected in 2024. These are pretty substantial, numbers that we've never seen in the history of the silver market before. As it says on the slide, there's over 10,000 uses of silver, and the crazy things like yoga clothing, soles of your runners, paints in hospitals, linens in hospitals, filtration system. Of course, when I'm going back to the 80s, when silver was primarily used in the photographic industry and the photographic industry went electronic, there was a lot of silver around because all of a sudden this one industry that was consuming 25% of the world's supply of silver disappeared. I noticed that being, at a copper company in the early 90s, and when I put First Majestic together in the early 2000s, I put it together because of the thesis, because I was seeing electronic usages increasing dramatically, and I expected that was going to continue. And that thesis has paid off quite nicely. And the last bullet there, and this is something that is some people don't. We heard the nuclear story on the prior presentation, but 80% of the rods within a nuclear reactor actually is silver. And with the new renaissance in the nuclear industry coming, we're going to see another big driver of silver demand over the next decade, which will be quite interesting to see.
Silver is no longer just the shiny metal adorning jewelry or heirlooms. It's the backbone of modern technology and innovation. Keith Neumeyer, a prominent figure in the mining industry, paints a vivid picture of silver's evolving role, skyrocketing demand, and dwindling supply. With over 1.2 billion ounces of silver expected to be consumed in 2024, and estimates as high as 1.4 billion ounces, we're witnessing an unprecedented surge in demand. Silver is the Swiss Army knife of metals, boasting over 10,000 unique applications. While it's a staple in jewelry and coinage, its uses extend to some unexpected areas. Yoga clothing infused with silver to combat bacteria. Runner soles benefiting from silver's antimicrobial properties. Hospital paints and linens where silver fights infection. Water filtration systems capitalizing on its purifying abilities. And let's not forget its historical importance. In the 1980s, silver's primary use was in photography, consuming nearly 25% of the world's supply. With the shift to digital technology, demand from photography evaporated, leaving a glut of silver. But as Neumeyer observed in the early 2000s, electronic applications began filling the gap, a trend that has only accelerated. Today, two industries alone, solar panels and electric vehicles, EVs, consume nearly 300 million ounces of silver annually. To put this into perspective, the global mining industry produces 830 million ounces per year. This means solar panels and EVs alone account for 40% of annual silver demand. As nations push for greener energy solutions, the solar industry's appetite for silver will only grow. Similarly, the EV boom, driven by giants like Tesla and BYD, ensures silver's place as a critical material for future technologies. Beyond green energy, the resurgence of nuclear power is creating another major avenue for silver. With 80% of the rods in a nuclear reactor containing silver, the demand from this sector is poised to skyrocket. As governments worldwide embrace nuclear energy to meet climate goals, this often overlooked source of silver demand will further tighten the market. While demand for silver soars, supply is struggling to keep pace. In the mid-1980s, there were an estimated 5 billion ounces of above-ground silver reserves. Today, that figure has plummeted to just 1.2 billion ounces. And the outlook for future mining production isn't promising. Flat to declining mine supply. Since peaking at 880 million ounces in 2016, global silver production has stagnated. Recycling woes. Extracting silver from used electronics is neither cost-effective nor scalable. A typical cell phone contains only $3 to $4 worth of silver, while recycling costs far exceed its value. With worldwide silver grade steadily dropping, new discoveries are few and far between. It takes an average of 17.9 years to bring a new mine from discovery to production, a timeline that highlights the inertia of the mining industry. The mining industry's cautious stance today stems from painful lessons learned during the 2011 commodities boom. Back then, silver prices soared to $50 per ounce, and gold approached $1,900 per ounce, prompting a wave of acquisitions. But when prices crashed, mining companies were left holding the bag, writing down assets to near zero. This experience has made mining executives hesitant to invest heavily in exploration or new projects without sustained price increases. Neumeyer predicts that only triple-digit silver prices sustained over a decade will incentivize the investments needed to boost supply. Silver markets are already in a substantial deficit, with demand outstripping supply year after year. Countries like India and China are exacerbating the issue. India imported a staggering 75 million ounces of silver in Q3 2024 alone, driven by its ambitious plans to build the world's largest solar farm. China. With laws prohibiting silver exports, domestic consumption continues to drain global supplies. As deficits persist, the question looms, where will the silver come from? Silver's unique properties and expanding applications make it indispensable in our modern world. Yet its dwindling supply and surging demand create a perfect storm for higher prices. As Neumeyer emphasizes, the coming decade will test the resilience of the silver market. Investors, industries, and governments must recognize silver not just as a commodity, but as a cornerstone of technological and economic progress. In the next section, we'll explore why this scenario makes silver an unparalleled investment opportunity and how its performance could outshine even gold in the coming years.
And here we've got two industries, the EV and the photograph or the photovoltaic industry, solar panels, consuming almost 300 million ounces of silver. And we're producing 830 million ounces of silver as an industry. And these two industries are consuming about 40% of the market. So they've replaced photography by twofold, basically. So the above ground supplies back in the mid 80s was about 5 billion ounces of silver sitting on the surface of the earth. Today, it's estimated, and there's a slide coming up, that there's about 1.2 billion ounces of silver left on the earth's surface. So this is the total supply, and you see that mine supply has been basically flat, slightly negative. We did have a peak back in 2016 of 880 million ounces. Then in COVID hit, we broke through 800 million, and then we had a recovery. Recycling has basically been flat. There's no money in recycling. Your cell phone has $3 or $4 worth of silver in it, and it's going to cost a recycler some multitude of that to even try to take it out. These technology companies of the world are very good at embedding copper and zinc and silver in these circuit boards, and it's almost impossible to extract these metals out of these these computers and televisions and refrigerators and microwave ovens and all the different things that are part of our daily life to get these metals out of these components that we rely on and consume on a regular basis. So, and what is future demand or future supply going to look like? Well, over the last 10 years, it's been flat. What's the next 10 years look like? You see worldwide grades dropping among the silver sector. Our grades at First Majestic have been dropping over the last 20 years since I put the company together. I see it all our peers, the same thing. The production from all the major silver producers on the planet has been flat and or negative. And what's it going to take? Well, Hecla came out with a number just a few months ago that it takes 17.9 years to build a mine from discovery to first production. That's a shocking number. So if you're ever going to see this number increase, what are you going to have to? First, you're going to have prices go up dramatically because the mining sector is not going to make the investment necessary. The mining sector is still in shock from 2011, 2012, where the mining sector thought that the metal prices were going to continue higher. Silver was 2011, silver was $50 in April. In September of 2011, gold was almost 1900. And the M&A activity in 2011, 2012 was quite paramount, and it hit a peak. And then over the next 3 to 4 years, all those mining companies wrote down those assets almost to zero, and to zero in many cases. And the mining sector was highly criticized for buying assets that appeared to be at the top of the market. But the mining executives at the time were being told by the banks that silver was going to go to $70 and gold was going to go to 3,000. Of course, it didn't happen. The metals, silver retreated to 12 from 50, gold retreated to 1,000. And the mining sector was highly criticized, as I said. You're not going to see the mining sector do that again. And this is what is going to happen with supply. So to change this number, you're going to need to have triple-digit silver probably for a decade to make any difference in supply, which is pretty shocking. So in an environment where we're already in a substantial deficit, and you got the nuclear renaissance happening, what's going to happen to prices? Where's the metal going to come from? So these are the deficits that we've been experiencing over the last few years. The 2024 number is an estimate, of course, but nevertheless, these are substantial deficits. We don't know where this metal is coming from. There's lots of guesses where it's coming from. Speculation that maybe it's coming from Russia. India is a big buyer. China is a big buyer. It's illegal for China to export silver. India is planning on building the largest solar farm in the world. They're going to need a lot of silver for that. Maybe that's why they're buying so much right now. Their Q3 silver consumption was the biggest on record. I think they imported something in the order of 75 million ounces of silver in that quarter. Pretty staggering number. This deficit's not expected to change in any way, in the foreseeable future.
Silver has long been overshadowed by its glamorous sibling, gold. Yet, as Keith Neumeyer underscores, silver is emerging as a star in its own right. Driven by surging demand, supply constraints, and its indispensable role in global industries, silver is poised for a meteoric rise. Let's explore why silver might soon be the MVP of the precious metals world. Silver is no longer just a hedge against economic turmoil. Its applications in technology and green energy have cemented its role as an industrial powerhouse. Solar panels. Solar energy is at the forefront of the green revolution, and silver is a critical component in photovoltaic cells. With governments worldwide committing to ambitious renewable energy targets, solar panel production is set to skyrocket. India, for instance, is building the world's largest solar farm, and China continues to lead in solar panel manufacturing. Electric vehicles, EVs. EVs are another major driver of silver demand. The metal's superior electrical conductivity makes it indispensable for batteries, wiring, and other components. As the EV market grows, with companies like Tesla, BYD, and legacy automakers scaling production, silver's role becomes even more critical. Nuclear energy. Neumeyer highlights a lesser-known but significant use of silver. Nuclear reactors. With 80% of reactor rods containing silver, the nuclear industry's renaissance will add another layer to the metal's demand. These sectors alone consume approximately 300 million ounces annually, accounting for nearly 40% of global supply. This figure is expected to grow as technology advances and the world pivots to greener energy. In the 1980s, the world had 5 billion ounces of above-ground silver reserves. Today, that figure has plummeted to just 1.2 billion ounces. This sharp decline is a testament to silver's widespread use and the lack of effective recycling methods. Unlike gold, which is typically recycled, silver is often lost in landfills due to its minute quantities in electronics and other products. Why isn't more silver being recycled? The answer lies in economics. Extracting silver from used electronics is a costly and inefficient process. For example, a smartphone contains just $3 to $4 worth of silver, while the cost of recycling far exceeds its value. This means that as we consume more silver, we're effectively depleting the planet's accessible reserves. Despite rising demand, silver production has remained stagnant. Global mine supply peaked at 880 million ounces in 2016, but has since declined, hovering around 830 million ounces annually. Recycling contributes little to the equation, further compounding the supply issue. Neumeyer points out that bringing a new silver mine online takes an average of 17.9 years. This lengthy timeline, coupled with declining ore grades, means that the industry is ill-equipped to meet the growing demand. Moreover, the scars of the 2011 commodities crash still linger. Many mining companies, burned by overinvestment during the last bull market, are now hesitant to expand without a sustained price increase. For the silver supply to increase meaningfully, prices must rise significantly, likely into the triple digits. Higher prices would incentivize mining companies to invest in exploration and production, but this won't happen overnight. In the meantime, the market will continue to grapple with deficits. Neumeyer emphasizes that sustained triple-digit prices are essential for the industry to ramp up production. This isn't mere speculation. It's a reality grounded in the economics of mining. Without higher prices, the sector cannot justify the massive capital expenditures required to boost output. While Western investors remain largely indifferent to silver, emerging markets are snapping it up. India and China in particular are driving much of the global demand. India. The country imported a record-breaking 75 million ounces of silver in Q3 2024 alone. This surge is partly due to India's ambitious solar energy initiatives, which require vast quantities of silver. China. With strict export controls, China ensures that its domestic consumption does not deplete its reserves. Silver is a key component in the country's technological and industrial advancements, making it a strategic asset. These nations understand silver's value and are stockpiling it, while prices remain relatively low. Their actions underscore a stark east-west divide, with Asia positioning itself as the dominant player in the silver market. Silver's unique characteristics make it an attractive investment for several reasons. Undervalued asset. Silver is significantly undervalued compared to gold, with a historical gold-to-silver ratio of around 15 to 1. Today, that ratio hovers near 85 to 1, suggesting that silver has substantial room to appreciate. Industrial demand. Unlike gold, silver benefits from both investment and industrial demand. This dual role provides a strong foundation for price growth. Hedge against inflation. In an era of rampant money printing and rising inflation, silver serves as a tangible store of value. For those looking to diversify their portfolios, silver offers a compelling combination of growth potential and risk mitigation. Historically, silver has outperformed gold during precious metals bull markets. This is due to its smaller market size, which makes it more volatile and responsive to demand shifts. For example, in the 1980 bull market, silver prices surged from $6 to $50 per ounce, an eightfold increase. In the 2011 rally, silver outpaced gold, reaching nearly $50 per ounce, while gold climbed to $1,900. Given today's market dynamics, a similar outperformance is not just possible, it's likely. For Western investors, ignoring silver could prove costly. While Asia is stockpiling the metal, the West remains fixated on equities, cryptocurrencies, and other speculative assets. This myopic focus overlooks silver's potential to deliver outsized returns in the coming years. Neumeyer warns that the current sentiment around silver is eerily reminiscent of past market cycles. Just as investors dismissed silver before its explosive rallies in 1980 and 2011, many are underestimating its potential today. But as history has shown, silver often surprises when least expected. The silver market is on a one-way trajectory toward higher prices. Persistent deficits, coupled with surging demand from industries and emerging markets, create a perfect storm for price increases. Neumeyer likens this to a one-way ticket, where the only direction is up. As supply dwindles and demand accelerates, the question isn't if silver prices will rise. It's how high they'll go. For investors, the time to act is now. Waiting for prices to move higher could mean missing out on one of the most significant opportunities in the precious metals market. Silver's unique blend of industrial utility, investment appeal, and scarcity makes it a metal like no other. As Keith Neumeyer emphasizes, the dynamics shaping the silver market today are unlike anything we've seen before. From its critical role in green energy to its historical outperformance in bull markets, silver is positioned to shine brighter than ever. For investors, the message is clear. Silver isn't just an alternative to gold, it's a must-have asset in its own right. With prices poised to rise and demand showing no signs of slowing, silver represents one of the most compelling investment opportunities of our time. Don't wait for the rest of the market to catch on. Start accumulating silver today and position yourself for the gains of tomorrow.
Stay informed about the latest developments shaping the precious metals markets with regular updates from the Finance Daily team. Not only that, but as a subscriber, you'll also receive timely silver and gold price notifications and early access to groundbreaking news unavailable to the general public. Join our free gold and silver newsletter today, link in the description.